The AI stock bubble, is it bursting or just a temporary dip? The stock market is a roller coaster, and right now it's taking investors on a wild ride. But here's where it gets controversial. After a sharp decline in some of the biggest tech names, particularly those leading the AI charge, stock futures inched higher Thursday night. Is this a sign of resilience or just a fleeting moment of calm before the storm? Let's dive into the details. Imagine the trading floor of the New York Stock Exchange, a bustling hub of activity where fortunes are made and lost in an instant. On Thursday, November 6, 2025, the atmosphere was tense as traders reacted to a pullback in major technology stocks, sending U.S. equities into a losing session. Yet by nightfall, futures tied to the Dow Jones Industrial Average climbed 95 points, 0.2%, while SP and Nasdaq 100 futures each rose about 0.3%. A small rebound, perhaps, but one that raises questions about the market's next move. And this is the part most people miss. The decline wasn't just about tech stocks. It was fueled by broader economic concerns, including October's job cuts hitting a 22-year high, making 2025 the worst year for layoffs since 2009. This grim data added pressure to an already shaky market, where AI leaders like Nvidia, AMD, Tesla, and Microsoft saw significant drops. The tech-heavy Nasdaq composite fell 1.9%, and the Dow closed nearly 400 points lower. Ouch. This week, all three major indices are in the red, with losses mounting since Tuesday, when fears of overvalued tech stocks sent AI giants tumbling. The SP 500 is down 1.8%, the Dow has lost 1.4%, and the Nasdaq is off by 2.8%. But here's the silver lining. Some investors are holding on to hope. They're betting that an end to the U.S. government shutdown and a potential December interest rate cut by the Federal Reserve could turn things around. Bold prediction or wishful thinking? Only time will tell. Louis Navellier, founder of Navellier Associates, remains optimistic. He believes a year-end rally is possible if the shutdown ends, tariffs are resolved, and Nvidia's upcoming earnings, just 2 weeks away, reaffirm the AI narrative. Corrections with these levels of gains are normal, he says. No need to panic. But is he right? What if Nvidia's results disappoint? Or if the Fed doesn't cut rates? What's your take? Meanwhile, Tesla made headlines as shareholders approved Elon Musk's staggering $1 trillion pay plan, with 75% in favor. The plan hinges on Tesla hitting ambitious milestones over the next decade, including a $2 trillion market cap. It's currently at $1.54 trillion. If successful, Musk's voting power would increase from 13% to 25%. Is this a fair reward for Musk's leadership or an excessive gamble? Share your thoughts below. In after-hours trading, several stocks moved significantly. Take-Two Interactive plunged 7% after delaying Grand Theft Auto 6 for the second time, now set for November 2026. Airbnb, however, soared 5% after strong Q3 results and upbeat guidance. Affirm jumped 12% on better-than-expected earnings, while DraftKings fell 4% on disappointing Q3 performance. Which of these moves surprises you the most? Why? As we wrap up, here's a thought-provoking question. With AI stocks facing valuation fears and economic data looking bleak, are we witnessing a market correction or the beginning of a larger shift? Let us know in the comments. We'd love to hear your perspective.